USDA. So back in the day, I used to do a decent amount of USDA. It was one of my, 3 programs I was constantly doing. This was really like the period of 2008 to about 2013. And the reason I was doing so much USDA is because if you qualify for USDA, it is an amazing program. Okay. Now, if you are military and you have a VA loan eligibility, or you're thinking, well, should I go USDA then, Jen? No, VA is still the gold standard, okay? You served our country, that is your benefit. It is a real benefit, it is awesome, VA. Okay, so you're not military. This is where USDA gets magical, okay? USDA is 100% financing. It is not to buy working farms. I cannot stress that enough. It is to buy, you could buy a single family residence, you could buy a condo, you could buy a townhome. Just because it says USDA does not mean you're gonna become a farmer or you have to be a farmer. So let's just push that aside. So why is USDA a great loan? Well, for first-time home buyers, or if you don't currently own a home. Now that's important. No other home ownership. Okay, you can't own another home at the same time. There's this little guideline that says there can be exceptions, but from everything I've ever seen, I've yet to see one be approved. So if you own 4 houses, USDA is not the right option. If you own 2 houses, USDA is not the right option to buy a 3rd. If you own 0 houses, USDA is worth considering. Okay, so it's 100% financing. It does have an upfront funding fee of 1%, which is lower than FHA's 1.75. Really what we do a lot is we compare USDA to FHA. If I have someone who's doing a lower down payment, it depends on credit. We may look at conventional, but in either circumstance, USDA 0 down, the mortgage insurance monthly is incredibly low. It's lower than a 3% conventional is going to be, even with great credit, and it's lower than what FHA is going to be. Okay, so it's 100% financing, and the mortgage insurance is incredibly inexpensive. Great. Okay, so why did I stop doing loans, USDA loans in 2013? Okay, it wasn't on purpose. So the basic issue I ran into is that at that point, my business was mostly California. Over the last 3 years, it's shifted dramatically. I'm probably 50% California, 50% out of state now. And in California, the issue we had is that housing became so unaffordable that you couldn't make the math work. Either the person made way too much to meet the income eligibility, or the houses were far too expensive. So I eased off it for a couple years. However, now that I'm in 48 states, I keep on opening up the USDA map and typing in address, and my eyes just keep getting bigger and bigger because there is a whole world of opportunity. And, I think about a lot of people who are in rural communities who maybe don't have lenders talking to them, so they don't even know this exists. So I hope you guys are watching because USDA is a killer program. Now, what is the first thing you need to do? The first thing you need to do, and I'm going to have a link, I'm going to put it in the comments and also in the body of the video, and the block underneath. You need to go to the USDA website and you need to type in an address in the county that you are looking. Okay. Now, if you're like, well, I don't have an exact address yet, who cares? Just go on Zillow. If you're looking in XYZ county in whatever state, find an address that looks pretty nice, type it in. Okay, the USDA property map eligibility is going to tell you immediately whether that's in an eligible area and if that county is eligible. Okay, and it grids it out. So if you're looking in a couple different counties, type in a couple different addresses, see if it's eligible or not eligible. I was super surprised. I was looking at a property in Minnesota and I was like, there's no way this is going to be USDA. Because you always think rural, like it can't be overdeveloped, and it was a pretty popular town. It was eligible, but the town over was not. So really important to know, if you're looking in multiple little areas, type in all the addresses, okay? That is step 1. Now, step 2, if your area is eligible for USDA, you are now going to go to the income eligibility. Now, To do a USDA direct loan, a USDA direct loan is exactly what it says. It's directly with USDA. You would not go to a lender like me to do a direct loan. In order to qualify for the direct loan, your income has to be below the area median. Okay? And that's like if you ever hear someone go, oh my God, we got like 2%, it was crazy, they gave us money. That is not through a lender like me. That is the USDA special programs that they're doing for people who are below the area median income. Okay? So very important to know that. Now, if you don't qualify for that, then the next thing would be that you're doing a guaranteed, which would be with a lender like myself. And with that, your income can be 115% of the median limit. What the hell is that? You guys don't know what the median limit is. I don't know what the median limit is for every single county in every single state. I don't even know what it is for my own. So how do you figure this out? Well, easy. They have the income eligibility calculator that you go through. Now, here's the thing that's incredibly important. And also, when you guys click on that map and it says, you know, the area is eligible, it's going to say what the area median income is. Okay? The calculator for income. Here we go. Now, something different about USDA than any other loan. It counts all the income in the house. So let's say you're the only person on the loan, but you're married, you have an 18-year-old that works at Starbucks, you take care of grandma who gets Social Security. Well, we're gonna be counting your spouse's income, we're gonna be counting your barista child's income, we're gonna be counting grandma's Social Security. Now, we're not gonna count all that income to benefit you with the debt to income. No, we're gonna be counting all of that income in order to see if you are under the area median income, if you're trying to go direct, or if you fit within the guideline of 115%. Okay, so you want to be really honest when you're filling it out. Also, the more people in your household, the higher the income allowed goes. So, you know, it's a bit of a catch-22, but what I'll hear people say is they'll go, well, I looked at it with both of our income and we make way too much, so I'm just not going to put them on the line with me. No, please don't, because here's the thing. They're very clear. It's all the income in the household in order to see if you're within the median guidelines. However, that doesn't play into your debt to income. So be honest about it. USDA is the only loan where after we underwrite it, it has to go to USDA for sign off. And I don't know if they go to Facebook or how they find stuff out. They will know if someone's in that house. I don't know how, but they'd know. They know. So don't play games, don't lie, don't try to massage the income. You know, you really want to make sure you're being honest on that calculator. Okay, I'm out of breath. I've been sick for like a month. Don't have COVID. Okay, so something else about income that can be very frustrating. If we're doing your debt to income, let's say that you've gotten overtime for the last 2 years, but you're getting a ton of overtime in 2022. We're going to be doing a 2-year average. In terms of qualifying for the income limit of what's allowed, they're going to be doing best case. So on debt to income, we do worst case, and on the income limit, they do best case. Okay, so it can be very frustrating because you may feel like, well, you're not giving me the income to get my debt to income loan, but you're making it so I don't qualify. How does this work? That's how it works. You're supposed to fit very specific boxes. This is not a loan product that they want anyone taking advantage of. That's why there's these very strict rules. So you really want to make sure that when you're filling out that income eligibility, that you are accurate. How many people are really in your house? If grandma gets Social Security, you better put it in there. You know, if your wife or husband has a side gig and they're showing $300 on their tax returns a month, you know, $3,600 a year, guess what? You better disclose it on that income calc, because you don't want to get into a position where we're digging into it and it's at that point that we go, you don't even qualify. Okay, now, so you've done step 1, you're eligible. You've done step 2, you've done the income calculator, you think it's eligible. Step 3, what do you do now? Okay, well, if you're below the area, Income median limit. Geez, that's a lot, right? Okay, if you're below it, then you're going to be direct, which means you can reach out to USDA directly and they will be helping you with your loan. If you need to do the guaranteed route, at that point you'd reach out to a lender such as myself. I'm licensed in 48 states. I'm happy to look at this for you guys, get you pre-approved. You know, the one thing about USDA is it is run through a different underwriting engine. It's not DU or LP, it's GUS. So you really want to make sure that you're working with someone who has processors that know how to process USDA loans, which thankfully we do. That's a good thing about having a Chadwick and a Maria. You know, they've both been in the business for a long time. Maria's been in, oh my God, 30 years, 35, 40, she's done everything. So we can always do, you know, we'll do up to a pre-approval where it's a full underwrite from us. We just can't do a red arrow approval with the loan commitment because ultimately USDA has to sign off on this and they only want to do that with active file. Step one, see if you're in an area that's eligible. Step 2, check your income, make sure you're within the range. Step 3, give me a call. We're happy to take you through the rest of it where you get pre-approved and you start shopping. I'm gonna do a video soon about some property things to keep in mind with USDA because it can be a little bit nitpicky and surprising. So as always, questions and comments, please leave them. My phone number is pretty much everywhere in the world now, and there's a link to my calendar. So if you guys are thinking, even if you're thinking of doing this in 6 to 12 months, get on my calendar now. And the reason I say that is, and sometimes, you know, you won't be able to get in the same week. And I hate saying that, but it's true. But if you're thinking of buying in 6 months, you know, get on my calendar so we can talk about where you are after you've done those 2 steps. Because if you're barely, you know, if you're almost over the limit and you start doing a ton of overtime, you're done, you know. So we want to talk about where you are and what some of the factors are so that we can help you plan for the future, because based on where your income's trending, USDA may be fine right now, but it may not be fine for the future. And at that point, we need to make sure you're looking at something else. Or, you know, debt to income on USDA is incredibly restrictive. It is the most restrictive program. So we want to make sure that debt to income is going to be in line. You just don't want to plan that you're automatically going to do USDA 6 months from now without talking to a lender, because it can be a bit nichey. So thanks guys for watching. Any questions, let me know. We will be doing more on USDA because seriously, there is so much opportunity across the country, and I think we all need to talk about it because we're not talking about USDA enough. Thanks for watching.